Welcome to Winning Strategies. We're going to be talking about how do you become a great complement to wealth transfer for clients. So many times we think about life insurance and we forget about the need to do retirement income planning. I think that those two go hand in hand of protecting longevity and protecting legacy. I'm sure that you've heard professional athletes talk about being in the zone. That zone for them is when they cannot miss a basketball shot, when they see every potential move on the football field before anything happens. They call it the zone. Well, in retail sales, being in the zone is about matching up opportunity and need. And I think now is a perfect time to be talking about asset-based long-term care. There's a huge opportunity. Only 7% of Americans actually have secured long-term care insurance. That means 93% of America is a prospect for you to talk about long-term care. There's a huge opportunity out there. And the need is huge as well. Also, you have $486 billion of non-qualified assets that still remain on insurance companies' books in the form of fixed indexed, or variable annuities. Those have embedded gains in there that whether you start using that for income or pass that on to the next generation, that is going to be taxed at that person's highest marginal tax bracket. These are great assets that were purchased largely for an emergency purpose. Well, let's match that emergency with the most likely event that's going to happen. That's a long-term care event. So you can take that non-qualified annuity to a 1035 non-taxable exchange to a qualified asset-based LTC annuity. That provides you additional dollars for long-term care events, but when you access those dollars, that becomes tax-free. So you've turned tax-deferred into tax-free. And I will guarantee you that whenever you talk to a client and you tell them that you can turn some tax-free dollars or tax-deferred dollars into tax-free dollars, they're going to be open to a conversation. So I encourage you to have that type of conversation with your client right now. When I travel around the country, I talk with a lot of wealth managers and annuity producers, and a lot of them do not value the importance of cash value life insurance as part of the retirement income plan. And I think that's a mistake. I'm going to give you two ideas where I think that cash value life insurance can be really important to really securing lifetime income. The first is using it as a bridge for Social Security. Today in America, only 2% of men and only 4% of women take Social Security at age 70 when it's maximized. Whether your client retires at age 62 or 65, you can use cash value life insurance to withdraw money on a tax-free basis to bridge the gap of Social Security payments for those 5 to 7 years. That allows that client to maximize Social Security all the way at age 70. That way you have the maximum amount of income that is on an inflation basis. The second use would be to use it as a non-correlated asset. Many people take a look at just using systematic withdrawal. What we like to do is implement a non-correlated strategy for our retirement income plans. We did a study and we used non-correlated assets, which could be cash, it could be cash value life insurance, fixed annuities. When the market ended up the year down, we used the following year's income from the non-correlated asset. That allowed that portfolio to recover. What we found is that when you use a non-correlated strategy, your failure rate was only 2%. When we used a systematic withdrawal strategy with no non-correlated asset, our failure rate was 26%. 1 in 4 times you failed before you reached the 20th year. And our life expectancies at retirement are far greater than 20 years right now. So if you're interested in reducing the risk of failure from 26% down to 2%, consider having a conversation about cash value life insurance with your clients. And I encourage you to have that sooner than later because you want to have time to build up that tax-deferred account so that you have more cash available for non-correlated assets. One of the things that we use in our industry is called annuity arbitrage, but it hasn't been used as frequently in the last 5 to 10 years. And I think that's because of a couple myths that are out there. The first myth is that interest rates are too low to really make that single premium immediate annuity work. And I think that's a mistake. Part of having a low interest rate environment means that you're going to have a higher exclusion ratio. If you put $100,000 into a single premium immediate annuity, you may find anywhere between 90 to 95% of that payment is actually returned tax-free to you. It's not what you earn, it's what you keep that's important in retirement income planning, especially if you're trying to create that arbitrage with life insurance. That allows you more after-tax income to pay for life insurance or secure even more death benefit. The second myth is that if interest rates go up, my payout will increase in the next 3 to 4 years. That's not necessarily the case. Even though interest rates are a small component of payout, the vast majority of a payout for a single premium immediate annuity is determined by the mortality credit. As our population gets older and as our population lives longer, that mortality credit will actually decrease. So there's a greater chance of those payouts actually going down versus going up in the next 5 to 10 years because of the reduction of mortality credits since we're living longer. So take those two things into consideration as you're looking at annuity arbitrage. Don't hesitate on using that annuity arbitrage today as opposed to waiting 5 to 10 years down the road for either interest rates or payouts to increase, because those may not happen. Thanks for watching. Hope you enjoyed this particular video. If you'd like more information, make sure that you follow this channel. Also, for more information about general retirement income planning, please follow me on Twitter at McGeeSpeaks, and also connect with me on LinkedIn. Those links to those different channels are in the description below. Also, if you'd like more information about the specific sales ideas that I shared in this video, please click the link for our written blogs on the Winning Strategies blog. Have a great day and good selling.